Folks, you better buckle up because Tom Lee, the Wall Street wizard behind Fundstrat, just dropped an explosive prediction you simply cannot afford to ignore. He boldly stated that the next 90 days will create the next generation of millionaires, and it's going to happen by the end of 2025. If you do what he's saying now, by the end of this year, you're going to be sitting very, very pretty. And in today's video, we're going to unpack exactly how and why he believes this incredible opportunity is unfolding right now. Now, if you've been following markets lately, things have indeed felt rocky, uncertain, downright scary. We've got tariffs, recession worries, inflation fears, you name it. The dogs are running around without leashes. The headlines have been nasty, but here's the kicker. While everyone else panics, Mr. Tom Lee sees golden opportunities hidden in the chaos. He's not asking, how do I avoid the market? He's asking, how can I make profits off the market? In fact, he argues what we're witnessing isn't a market crash, but rather a temporary growth scare, just a speed bump on the road to much, much, much higher gains. Now, as you know, Tom Lee isn't your average analyst. This is a guy who consistently nails market calls when everyone else gets it wrong. And that's why we talk about him so much on this channel. And just a quick refresher, I mean, you can go back to prediction after prediction after prediction that he got right and caused many people to make tons and tons of money as a result. Just back in 2023, amidst a sea of bears calling for doom, Lee went bullish. People said he was an idiot, that he was crazy, that he was going to be laughed off of Wall Street. And guess what? He was spot on, and anyone who listened made serious money. And he made his clients oodles and even poodles of dollars. And now he's back again, taking another bold contrarian stance. As people are out for blood, he's saying, wait a second, why are you looking for blood? Now is the opportunity of a lifetime. He explains that the next 90 days is going to matter a lot. And in today's video, we're going to dive into exactly why. But as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence before taking any action on any ideas presented. And also, quick plug, today's video is brought to you by our 100% free daily email newsletter report. We deliver research on trade ideas, catalysts, and key happenings each and every single day, and we don't want you to miss these reports, so I'm going to put that as the first link right down below. Okay, so Lee says that we could see the market bottom right here, right now. Yes, literally this week could mark the lowest point of this downturn. Historically, March, April, and May have delivered explosive rallies even when market sentiment was at rock bottom. Why? Well, because markets typically hit bottom before the bad news peaks. By the time things feel their worst, smart investors are already buying and markets are setting up for a powerful rebound. Here's another angle Lee emphasizes: the Federal Reserve. While everyone is worried about higher rates and tighter monetary policy, Lee believes the Fed is about to pivot, perhaps sooner and more aggressively than anyone expects. If upcoming jobs and economic reports show weakness, and Lee anticipates they will, well, the Fed will likely accelerate interest rate cuts. This isn't speculation, it's a classical historical pattern. Lower rates mean higher stock prices, plain and simple. Now let's talk specifics, AI stocks. Lee acknowledges some recent skepticism around high flyers like Nvidia. Yes, the AI trade cooled off a bit after last year's massive run, but this isn't the end of the story. It's just an intermission. Lee argues that the long-term demand for AI, data analytics, and productivity enhancements hasn't changed. Companies like Nvidia, Microsoft, and Palantir, despite recent pullbacks, are positioned for another wave of massive growth as AI adoption accelerates. Speaking of Bitcoin, hold on to your hats. Tom Lee is doubling down on his ultra-bullish stance. He's now predicting Bitcoin could surpass $150,000 this year, driven by wider acceptance, institutional money pouring in, and decreasing macroeconomic headwinds. Even if Bitcoin feels volatile right now, well, look at the history. I mean, history shows it makes most of its annual gains in just 10 explosive days. Miss those 10 days and you're out of luck. That's why Lee strongly advises staying invested even through these choppy patches, making sure to buy the dip. Because if you don't buy the dip, well, it's going to be hard to let it rip, right? But at the same time, Lee is real. He says, look, there's genuine risks. Lee openly acknowledges the geopolitical wildcard that are Trump's tariffs and the further tariff threats. If Trump pushes tariffs too far, inflation could surge while wages stagnating, triggering stagflation. And that is a recipe for a disaster, a genuine recession risk. However, Lee says that he doesn't believe that Trump will take tariffs to the extreme, at least not over a long-term time horizon. He thinks it's a negotiating tactic, and he also thinks that the market has already partially discounted Trump's tariff threats as political posturing, and thus Lee sees this as more of a scare than a genuine threat. Here's the bottom line, folks. The most crucial part of Lee's message isn't about picking the right stocks or sectors. It's about investor psychology. Warren Buffett, the Buffett of Warren, famously said, "Be greedy when others are fearful," and that's precisely Lee's philosophy here. It kind of sounds cliche at this point, but look, when markets panic, investors bail, and fortunes are left on the table for the few, well, you got to be one of those few that is up and grabbing those fortunes. And in order to do that, you got to remain disciplined and strategic. And that is what Lee is saying right now. Tom Lee says, look at the facts. Focus on the facts. Bear markets historically average just 10 months, while bull markets average 5 years. So play the odds, stay disciplined, and the wealth building opportunities become undeniable. Now, Tom Lee has highlighted yet another critical factor that's often overlooked, and that's market breadth. Recently, as you know, we've seen markets propped up by a handful of major tech stocks, while many smaller companies have been underperforming. Lee points out that broader participation when more sectors join the rally is essential for a truly healthy bull market. Right now, breadth is improving, indicating stronger foundations for a robust comeback. Watch for breadth improvements over the next few weeks, as this is often a precursor to explosive upward moves overall. Now, I know that Tom Lee is considered a permabull, but he's not just somebody that's throwing predictions out blindly. He's also watching some key indicators that tell the real story beneath the headlines. One of those is the put/call ratio, a powerful gauge of market sentiment. Right now, it's flashing extreme bearishness. Historically, extreme bearish sentiment tends to precede market bottoms and significant rallies. Lee's advice: pay close attention to that, because when sentiment flips, gains can happen swiftly and violently. And speaking of opportunities, let's discuss small cap stocks. So Tom Lee has repeatedly emphasized that small cap stocks, specifically represented by indices like the Russell 2000, could lead the next rally. They've been beaten down badly, creating historically attractive entry prices. Lee believes these smaller high-growth companies could be amongst the biggest winners in this rebound, providing outsized returns for investors willing to step in early. Another critical point Tom Lee stresses is seasonality. Yes, I know seasonality sounds boring, but stay with me here. Historically, the stock market tends to follow distinct seasonal patterns. Lee points out that we're entering one of the strongest seasonal windows for stocks. And over the past few decades, Q2 has consistently delivered impressive returns, especially following periods of market uncertainty like we're experiencing right now. So the calendar itself might just be another tailwind in our favor. Now, folks, Tom Lee has been crystal clear about where he sees the greatest opportunity, though. Yeah, he sees opportunity almost everywhere, but there's one specific spot that he sees more opportunity than anywhere else, and that is in tech. Despite, yes, recent volatility, well, tech remains his top pick. He specifically calls out semiconductors, software services, and AI-driven businesses as sectors ripe for explosive millionaire-making growth. But I want to be clear, we're talking about companies with robust balance sheets, relentless innovation, and dominant market positions, like NVIDIA, AMD, Palantir, and many other emerging disruptors. According to Lee, these sectors are positioned for significant gains once the market shifts sentiment from fear to optimism. And beyond tech, Lee is also bullish on cyclical stocks, industrials, financials, and materials, sectors that thrive in an environment of accelerating economic growth. With rate cuts on the horizon and inflation fears subsiding, these cyclical names could deliver powerful returns as investors rotate away from defensive sectors and bonds into growth-sensitive equities. And we love when growth stocks rally, don't we, folks? So he's saying, look, it's all about positioning ahead of the crowd to capture that initial explosive move. Now, let's talk about what investors are missing. According to Lee, the current market anxiety is actually healthy. It shakes out weak hands and sets the stage for sustainable rallies. He emphasizes that it's precisely this kind of environment of fear and pessimism that creates maximum opportunity. Market sentiment indicators he tracks closely have rarely been this bearish, which historically sets the stage for significant reversals. Another fascinating piece of Tom Lee's thesis involves liquidity conditions. Despite headlines about tightening monetary policy, liquidity isn't drying up as fast as people think. Central banks worldwide, including our Fed, remain committed to ensuring stability. Lee notes that when markets realize liquidity is still robust enough to support economic growth, we'll likely see a flood of investment returning to equities. Moreover, Tom Lee's message includes cautionary wisdom about the perils of market timing. He emphasizes repeatedly, timing the market perfectly is virtually impossible. Instead, he recommends an approach of disciplined incremental investments, ensuring you're positioned to catch the big moves when they happen. Dollar cost averaging into strong names that you believe in during periods of uncertainty has consistently proven effective, especially during volatile periods like right now. Lastly, consider Lee's personal record. Back in 2020, he made a similar bold prediction that few believed in at the time. He called for a massive rally post-pandemic when nearly everybody else out there was panicking. And guess what? He was dead right. Investors who listened to him then saw enormous returns. With a similar setup unfolding today, ignoring his current prediction could be a costly mistake. So here's the action plan he lays out for investors looking to ride this wave. You got to stay calm. Do not let your panic dictate your investment decisions. Emotional investing almost always results in losses. You got to identify quality stocks at discounts. Look at proven winners and disruptive sectors. AI technology giants like Nvidia and Palantir, electric vehicles like Tesla, and fintech. You got to dollar cost average. Consistently and gradually buy into your highest conviction stocks. Even better if they're discounted massively. Timing the market perfectly is nearly impossible, but consistently investing through dips significantly boosts long-term returns. You got to trust historical patterns. Lee has shown again and again that when markets price in too much bad news, explosive rallies typically follow, and history doesn't lie. And finally, you got to consider this incredible statistic that Lee shared. The top 10 market days each year often deliver up to 20% of the annual gains. Missing those days because of fear or attempting to time the market perfectly can dramatically hurt your long-term returns. Now, here on this channel, we're a big believer in trading the market, right? Buying in at good prices, riding it up, and locking in some profits. And he's not saying that's bad here, but what he's saying here is that if you're just going and panic selling all of your long-term positions every single time there's a little bit of bad news in the economy, well, you're going to miss out on some of the best performing days out there. And that's just a historical fact. Over the last century, investors who missed the top 10 days each year would have seen their returns plunge from positive territory into significant losses. Just let that sink in. You miss just the top 10 days each year, and your returns plunge from positive territory to significant losses. And this is data dating back 100 years. So here's the final takeaway from Tom Lee. The next 90 days could indeed make millionaires, but only for those who stay the course, embrace uncertainty, and invest strategically. Tom Lee's track record speaks for itself, and right now he's giving us a once-in-a-generation playbook. It won't be easy, it never is, but the potential rewards are staggering. If you're ready to grab this opportunity, make sure you're subscribed, smash that notification bell, and stay tuned. We're just getting started here. We're in inning 1, and we got to be prepared for what's coming because there's going to be a lot of money-making opportunities. And if you want to go that extra mile to make sure that you are informed on every little market opportunity out there, make sure to sign up with that first link down below to our absolutely free email list. You'll get our free daily research reports, and you're going to be very, very upset if you miss what's coming. Anyways, that caps off today's video. Have a great rest of your day, and we'll see you next time.